Pakistani economy, first of all, if we put it in the right perspective, it has been in a stabilization program under the International Monetary Fund for now almost, more than 3 years with some break in COVID time. Now, this program has started showing some results at the macroeconomic stabilization level, which what does it mean? It means that the pressure on our external payments has gone down a bit, and our current account, balance for the first time looked good in the past few months. We have our reserves going up, foreign exchange reserves, and that cover about 3 months of our import bill, which had gone down to less than a month. Inflation, which had gone, totally out of control to the tune of 30% or so, it has been gradually coming down, and the last month's inflation was in the range of 5% or so. It has had an impact on the interest rate, which has also been, reduced from a very high level of 20% to around 15%. So these all, and some exports, particularly in the IT sectors, have improved. Remittances have gone up. So these are what we call are the indications of macroeconomic stabilization. And so who does this? Who benefits from that? Macroeconomic stabilization is largely beneficial for the state, because state can pay its bill better, the external payments, the debt payments, the import returns. State also gains a little bit politically, because they can boast about some of these inflationary numbers going down. But mainly what Pakistan needs to understand is that the state is the largest borrower from the commercial banks in Pakistan. So if the interest rate goes down, so states, government's interest payments drastically go down, so they get a little bit more fiscal space because of that. So the first beneficiary of this macro stabilization is government of Pakistan, which has, this pressure of, making external payments and, even meeting your pension bills and others. So they have a little bit more relaxed position at the moment. Then we see inflationary pressure going down. So we need to make a distinction. Distinction is that, it is not the level of prices which is declining. Level of prices will decline when the production of goods and services increase, competition increases, and economy expands. Supply side goes up. At the moment, it is the increase in prices, which was to the tune of 25-30%. It has gone down to between 5 to 10%. Now, so prices are still very high. They are going up, but at a much smaller now margin than it used to be. So it does not help the consumer in terms of the erosion of their consumption power. But in future, the further pressures are likely to be much less harsher in terms of pricing what it used to be. So that is very important point to understand what this macro stabilization means. Now, the second part is who is gaining is the people with lots of money. You see, stock exchange has gone up unprecedented levels. But again, the stock exchange, it is what one needs to understand is that it is a secondary market trading where brokers and rich investors are making money. It's not doing capital formation for economic expansion. Now, this I need to explain. Pakistan's, what we call is the core fault line in economics is that Pakistan at the moment it does not produce enough things for 240 million people, does not produce things of quality and value addition. So we became the net importer of things. But if we need to change that, capital formation in terms of investment needs to come so that our current industrial base expands in a productive manner. We produce better things, more things, we produce exportable surpluses. This is the challenge of job creation and exports that remains where it was before, because large scale manufacturing is not showing what numbers actually Pakistan should see the positive trend. Similarly, the GDP growth of 3%, if we attain, is not enough for 3 million boys and girls coming in the labor market every year. It is not enough to lift the people out of the poverty line. Around 100 million people are living below the poverty line. Now, that is where the economy is not delivering at the moment. And we can hope that certain policy interventions and certain changes in the way we operate will start, in a couple of years' time, yielding sub-results for the sectors which are more than 50% of our population, which are terribly stressed and under hardship conditions living their lives. They are not going to get benefits, for this macro stabilization in a very short-term future. And our past shows that these bubbles have come. We get macro stabilization in the program, we get relaxed, economic growth goes up to 4-5%, and then we cannot sustain because again the imports go up. Now currently under the IMF program, the way it is structured, they compress the demand. But if we go relaxed, the demand goes up, money supply goes up, we will get into the same inflationary pressure again, unfortunately. At the moment, oil prices are down and, these things are helping Pakistan. But Pakistan needs to have a very careful look. The rise in remittances, in my personal opinion, is because people are sending more money to their relatives because their consumption power has eroded. But that, how can you sustain it? Economic vulnerabilities globally are quite, uncertain. With Donald Trump coming in the US, we need to see what kind of policies will be in place. It looks like that the China-US competition will further intensify. So the core in summing up issue is that Pakistan now needs to wisely use this macro stabilization for the benefit of the masses and population by having cutting-edge policies which can bring in more investment in productive sectors like agriculture, like value-added textiles, like technology. That is where jobs will be created. You cannot continue dealing through handouts, a Benazir income support program to feed the poor people. One needs to create meaningful, dignified economic opportunities of a large young population. They are still struggling in the bigger way. So economy, certain things are better, but for a few people and for the state. But economy at large, there are two challenges. Create the dignified opportunities, you need 7% growth in the real sectors and productive sectors. And second, which is more important, how to sustain that momentum of growth, because over the past 30 years, we cannot sustain growth because the weaknesses in the structure of economy. We need economic growth that creates job, which is not coming out of real estate sales and purchase or stock market sales and purchase or some other services. We need basically labor intensive industrial expansion in our comparative sectors of our comparative advantage.